for example, let's say you're a family of two, you're married or you have one dependent, right? Two people in the household, and you said, oh, I expect my income to be $30,000. I'm just throwing out numbers, right? What's going to happen is when you fill out that application, the IRS is going to say, okay, based on that, you're a family of two and you expect to make $30,000. Your tax credit is, let's use simple numbers, okay? Is $100 a month. So then you would pay whatever the difference is for your insurance. Let's say the difference is $20, okay? So your insurance actually costs $120 a month. The thing is, the IRS, based on your expected income of $30,000 and that you're two in the household, you're going to receive that $100 tax credit. So the insurance company is receiving the $120. You're paying $20, and the other $100 is being paid for with that advanced premium tax credit that the IRS is giving you. Okay? Now, that's what you said in November for January. So let's say now in April you start a new job that still doesn't offer you health insurance, okay? But now instead of $30,000, your income went up to $45,000 for the year, okay? That's when you should be calling your agent to say, hey, back in November I told you my income was $30,000, but that's because I was working here, and now my income is actually going to be higher at $45,000, okay? So your agent should then go ahead and give you a new quote based on that $45,000. Well, now your insurance, instead of you paying $20, now you pay $50. So what's going to happen is that the IRS, instead of giving you the $100, you're going to pay, they're going to give you $50, and then you're going to pay the difference of $70, right? Going back to those numbers. So why? Because now you're a family of two making $45,000. So while you still need help paying for the insurance, you don't need as much help as somebody paying as somebody making $30,000 a year, right? So again, this is all based on family size, income, and financial need of that family based on those factors, okay? So what happens if the whole year passes by and you got this job in April making $45,000 and you never reported your income change? Well, simple. When you file taxes next year, so again in 2026 for 2025, the example we're doing, okay, you paid less for your insurance than what you should have paid, right? Because your income was higher. So all that's going to happen is that the IRS is going to ask for that money back. Again, this is why it's not a penalty. It's just asking you back for a tax credit that you received throughout the year that really you were eligible for, okay? Now, this is why part of what you sign when you do an application with the marketplace is that if I have changes in my income, I'm going to report those changes.